All right, forget about crypto, forget about tech stocks for a second. The smartest money on Wall Street is piling into an industry you've probably never even thought about. Roofing. Yeah, roofing. Today, we're going to dig into why this $100 billion sector is all of a sudden a massive gold rush.
Okay, check out this number, 56. That is the number of private equity platforms right now that are doing a roofing roll-up, buying up a ton of smaller companies and smashing them together. Just 2 years ago, that number was 17. That is a crazy jump. So the real question is, what did Wall Street just figure out that nobody else saw?
And we are not talking about small deals here. $810 million. That's what Top Build just paid for one single commercial roofing company. This tells you everything you need to know. The old world of just, a bunch of local roofing businesses is ending. We are entering an era of massive industrial-scale consolidation. So what's the big deal with roofing? Well, it's this huge fragmented market, but it has one killer feature. It is non-discretionary. 80% of the demand isn't people who want a new roof, it's people who absolutely need one. Think about it. When water is pouring into your living room, you're not spending months getting quotes. You're making a call and you're paying what it costs. Okay, but all this excitement leads to a central puzzle, really. If this industry is such a gold mine, why are the actual valuations for the small companies you can go out and buy so low? Let's get into this valuation mystery.
And this right here is the million-dollar question. If you've looked at buying, say, an HVAC or a pest control company, you know those multiples are through the roof. So why is roofing, this $100 billion industry, trading at such a steep discount? It doesn't seem to make sense at first glance.
And this chart just lays it out perfectly. Look at this. Solid, profitable roofing businesses are going for 2 to 2.7 times sellers' discretionary earnings. That's basically the total cash flow to the owner. Meanwhile, other home services are hitting 4 times SDE. Easy. That is a massive valuation gap.
And here it is. This is the aha moment. The entire valuation story boils down to these 2 words, recurring revenue. That's stable, predictable, almost subscription-like income. That's what private equity and other big buyers will pay an enormous premium for. It's the absolute holy grail.
And this chart shows you exactly why roofing gets that discount. Look at it. The vast majority of a roofer's money comes from one-and-done projects. Only that tiny little 5% sliver comes from recurring maintenance contracts. It's a project-based feast-or-famine business model, and that lack of predictability is exactly what keeps those multiples low. So, here's the crucial part. For savvy investors, this valuation gap isn't a problem, it's the entire opportunity. It is the bedrock of the private equity playbook for turning a 2x acquisition into an 8x exit. And here's the playbook, laid out in 4 simple steps. 1. You go out and buy these small roofing companies at that low 2 to 2.7 times multiple. 2. You relentlessly focus on building up that recurring revenue, mostly through commercial maintenance contracts. 3. You bolt on smaller, strategic tuck-in acquisitions to grow your footprint. And finally, step 4. You sell the whole, combined, much larger business for a much higher 6 to 9 times EBITDA multiple. That gap is where you make your money. Now that all sounds fantastic on a PowerPoint slide, doesn't it? But roofing is a tough, gritty business. This is not software. There are some serious, on-the-ground challenges that can completely destroy this playbook if you're not ready for them. So time for a brutal reality check. Okay, risk number 1 is the insane volatility of your material costs. Just look at this asphalt index chart. It's at an all-time high. A sudden spike in the price of shingles can completely vaporize your entire profit margin on a job you quoted months ago. This is a huge risk to your cash flow.
And even if you can get the materials, you still need people to actually install them. And the labor market hits a full-blown crisis. We're talking 13,000 open jobs every year, a mind-boggling 21% turnover rate, and a workforce that is getting older and older. Finding and keeping good crews is brutally difficult.
And if you think this is just theory, here's a real-world cautionary tale. Rusco Home Partners. They were a big private equity-backed roll-up trying to run this exact same playbook. They ended up filing for Chapter 7 bankruptcy, crushed by debt, crushed by margin pressure. This strategy can and absolutely does fail.
So, knowing all these risks, where you choose to operate becomes absolutely critical. Success in this business is incredibly dependent on your location. So, let's pull up the M&A heat map and see where the real opportunity is and where you should probably stay away.
In roofing, geography is basically destiny.
You want to buy in markets with high growth and a lot of weather-related action. Think Phoenix, booming population and a huge demand for energy-efficient cool roofs, or Tampa, where hurricanes create a steady, non-stop stream of insurance work. The places to avoid? Markets like Portland or Seattle. The mild climate means roofs last forever, and the high labor costs just crush your margins. Okay, so we've covered the big PE strategy and the market dynamics, but let's bring all this down to earth for a minute. Let's look at a tangible, real-world deal that an individual buyer could actually go out and do.
$1.5 million. This is a very typical, very real price for a quality roofing business doing, say, $750,000 in owner's earnings. This is based on that 2x SDE multiple we've been talking about. This is an attainable target.
And here's the best part. You do not need to be a millionaire to pull this off. With a government-backed SBA 7A loan, you can often buy a business like this with just 10% down. That's a $150,000 investment to acquire a $1.5 million asset.
So what's the payoff? Well, this is it. In your very first year, after you've paid the bank, after all your other expenses, this is your projected take-home cash flow. Over $100,000. That is a fantastic return on that initial $150K investment. The math here is really, really compelling. So, to wrap it all up, roofing presents this rare arbitrage opportunity in a huge, essential industry. The potential for profit is massive, but it is not a get-rich-quick scheme. It absolutely requires real operational skill and a willingness to get your hands dirty. So we've laid out the entire playbook for you. The opportunity, the risks, the potential rewards. The only question left is, are you ready to actually trade in the spreadsheets for the shingles and go unlock that value? The roofing gold rush is happening right now. The only question is whether you're going to be a part of it.